series that, I've kind of dubbed the Ultimate Trading Guide. We started off the first week with just a basic intro to it. We got into talking about risk reward, using an options chain, buy orders, sell orders, the different types of orders. We got into charting and learning about a few technical systems that you could apply to your trading to consistently produce profits. And tonight we're going to answer the big question that a lot of people have that kind of ties it all together. And that's basically, well, Coach Mike, I hear you say all the time, you can't force your trading system on a chart. You have to find a trading system that fits that chart. How do I do that? And that's what we're going to talk about tonight. One thing we've gone through over the past few weeks in discussing, different technical aspects of trading, technical trading systems, is the use of the system, and also what I would hope would be something that you would have observed from that would be basically how to identify some specifics on a chart, knowing that there is no trading system that's going to give you every trade. What you really want from a trading system is to be able to trust the trades it gives you. You want to see the ability to consistently make profit while understanding that there may be some losses. And being able to basically determine what it is that you can use to get you to that point. Not every trading system will be effective on every single chart. So what I've started with today up here on the desktop sharing is just a naked chart. The ticker symbol doesn't matter. And when I start studying a chart, a little bit of it kind of goes to the eyeball test. I know this sounds real scientific and whatnot, but that eyeball test can tell you a lot as to where to begin your study. Now, this particular chart that you see here, I know the candles are quite small, and that part really doesn't matter either. As you start to look at this one particular chart, what ideas do you get as to trading systems that are in relation to the ones that we've discussed over the past few weeks? Just by looking at the chart, when you sit and stare at that chart a little bit, and you start to see the patterns that it's making, well, thankfully, we didn't go over channels as part of this. Okay, so a few things are coming out. Some people talking about swing points. That wouldn't be a particular trading system. Nikki, come on now. At least you're here, though. Heather's at the bar I just left. When we just look at this chart, let's look at, based on what it's done, what we feel we'd be able to use to effectively trade it. Just take a minute and kind of look at it. Just want to give you a minute. I mean, when I first start studying a chart, I sit and stare at it a lot. Kind of picture in my head as if I were putting drawings all over it. What does it look to me to be the opportunity at a high degree of effectiveness? I saw one person said something about moving averages. I'm just going to put up a few moving averages because that's an easy way to start with dissecting your chart. And what I want to see if I'm going to use moving averages for a chart is first, not necessarily how it curls, because I mean, as the price moves, the moving average is going to move as well. I want to actually see, knowing that a moving average system is going to have me in all the big trades, but basically breaking even on small trades. If I'm going to use a moving average system, I've got to see lots of trades, lots of big moves, lots of big moves. And as I start kind of, I zoom in here a little bit and I start to look at this. If you looked at like where the yellow line is, my 8 simple moving average, let's just look at every time it's curled. Well, if I would have bought this stock here, by the time it curled down, well, there's a break even. So many times I'm either breaking even or losing money, breaking even, losing money. Every one of these trades, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, possibly 15 times that the 8 SMA curled, I can't make money. Well, let me go back here. If I buy at the time the 8 SMA curled right here, well, you know what? By the time it curled down, well, I still could have maybe made a little bit there. I could have made some here. But what I want to see on a stock that I'm going to use a simple moving average trading system or any moving average trading system is how many big runs. Because let's face it, each one of these little squares here is a day. So, here's something I'm going to be in 1, 2, 3, 4 days to basically break even. 1 and then up, break even here. Actually, that would have been a loss. Just to turn around the very next day to get in again, and well, that one would have made some money. So for me to even want to use a moving average system, first, I got to make sure that the moving average I'm using is not going to have me in 8 out of every 10 trades being a break-even type scenario. As I look at this particular chart, I can easily see, and let me go down to just the single moving average on there so that people aren't confused by everything that I have on the chart. What I get here is, yes, on any one of the big moves, the moving average trading system would have made me money with an 8 simple moving average. But in all reality, a moving average system is going to do that on any big move. I want to see how many times I have to break even plus or minus a little bit compared to the big trades I get. For instance, here, starting right in here, this is early December. Through this almost 2-month long period, that 8 simple moving average is really only going to give me one definite winner and a bunch of break evens for 2 months. Now we got to stop and think about something. How likely are you to stick with that chart if over a 2-month period you see plenty of ups and downs, but basically break even on all your trades, plus or minus a little bit with a moving average system? how likely are you to stick with that chart? Not likely. That doesn't mean it can't be traded with moving averages. That could possibly just mean that that moving average is not necessarily the one you'd want to go with. And I can quickly see that the 8 simple moving average on this particular chart, and by the way, the ticker symbol doesn't matter right now, nor does the time frame of chart, because what works on the 60-minute chart, the chart that is displayed right now, might not be what you want to use on a 15-minute chart. You truly need to study each chart independently for the types of trades you're making. So seeing right now already that 8 simple moving average isn't going to be the trade I want to make, well, I'm going to get that off my chart. Now, because we're talking about the moving averages, well, when starting out, Eucharist, your question, how far do you go in time when backtesting? I go back as far as my charts will let me, but I can tell you this, I would never put money into it until I've observed it as if I was trading it, sat and watched it knowing I'm not putting money in it, and seen what the effectiveness would have been with my own eyes. To do anything other than that, to me, is a crime against your capital. If you're not willing to put in the time first, you should never trade it. Now here, I've kind of broken this down to a 21 SMA, and just like any simple moving average system, all of the big runs I'm going to get in might be at a different time that an 8 SMA would have got me in. And just like all of the SMA type systems on the little moves, like, right here we curled up. By the time it curled down, I'm breaking even. You curl down, well, by the time it curls up, you're breaking even. Curls down, okay, this would have been something decent. But again, what I see is something that's not really conducive to a moving average trading system. When I'm looking at a chart, if I'm going to trade moving averages, what I basically want to see is that when it starts moving, it moves quite a distance. And when it turns back the other way, it moves quite a distance. And I want to see that happen more times than I get these essential break-even type trades, whereas by the time I get a buy, I don't get a sell until I'm pretty much at break-even price. And that's one thing to understand with a moving average system. Now, like I said, the time frame of the chart doesn't matter right now. No reason to private message me about all that kind of stuff with time frames and this, that, and the other. It doesn't matter if it was a 1-minute chart. The way to start breaking it down and studying it is exactly the same. So at this point in time, what I'm really starting to observe myself with the moving averages is that if I buy using the curl of a moving average, there are so many times on this particular chart that by the time that moving average curls up and then curls back down, I am quite literally going to be at pretty much a break even, plus or minus just a wee little bit, on 4 out of every 5 trades I enter. Now, put yourself in my shoes. If I were to email you and say, okay, guys, I got something, 4 out of 5 trades, we might lose a little bit, might make a little bit, but really you're going to just average breaking even. But man, 1 out of every 5 trades we're going to make money on. But I have no clue which one out of those 5 trades is going to make money. Who's down with that? Well, we're just going to hope we make money on one of the 5s. Exactly. That's my thoughts exactly. It's not the worst case scenario, but it's really not worth my time. What I want to do, if I insist, like this is Twitter's 60-minute chart. If I insist I want to study and trade Twitter on the 60-minute chart, I don't want to say, oh, I'm a moving average trader. It's got to work. That's how I'm going to trade it. And the whole point of tonight is to be able to observe that, hey, that's not necessarily where we want to be. Where we want to be is in a position that we say, hey, moving averages aren't as effective on here. Could they be effective on another chart? Absolutely. But not this one, not right now. So with moving averages kind of thrown to the wayside, a couple people brought up swing points. Now, because I've got this zoomed out to a full like 180 days, it's going to be kind of hard to catch every one of these points kind of dead on, but let's look at the key times that would come to mind on where you'd want to buy. Here would have been a swing high break, but man, you want to buy on that swing high break? And then spend 1, 2, 3, 4, 5, 6, really 7 days falling. But in that case, is this just maybe a one-time occurrence? If we go through here and look at the consistency when you get a break, what you're actually going to find with Twitter, again, it doesn't even break the swing point, doesn't even break it, and then boom, gap above it. You can't really buy that with your swing point system. If I mark my swing high here you put a wick right at it. Let me zoom in one more time so we can kind of go through this a little closer. So you put a wick above it, and then boom, you actually gapped above your swing point again. Which means even though it's just a small gap, well, except for here, that was a pretty big one. What this really translates to is obviously if you're buying on a gap up, you have to realize that, okay, you know what? I think it's going to keep going, so I'm buying, but man, that could come back down to my swing point. That's what you'd be saying with a swing point system. I want an effective buy that gives me opportunity close to my swing point. If I'm trading swing points specifically, I really want to see times where it breaks a swing point, retests the swing point, and moves from the swing point. Now, we have talked a bit about the 50-50 system, which is using swing points, but is nowhere near how you would actually trade swing points. In our swing point lesson, at the end of that, we actually talked about those differences. But, for the 50-50 system, you do want a stock that once it breaks a swing point, isn't likely to retest that, right? I mean, if it does retest it now and again, you're fine. But, you want to be able to buy here and be good with it going up. But at the same time, if you're using the 50-50 system, you're buying the following weeks. And, in this particular case, you buy on this candle. And 1, 2, 3, 4, 5, 6, 7 trading days later, you're kind of still at the same spot. If you look back over here, yeah, you might have got a buy right here when it broke below, but 1, 2, 3, 4, 5 days later, you're still in the exact same spot. If you look at this particular chart and you go through it and actually look at it in a way that would be conducive to your trading, what do you really see here? Let me zoom in one more time, just a little bit closer. Let's look at the times that it breaks a swing high point. What do you see about the candle that breaks a swing high point? What do you see about it? You have to see it. Let's look at this candle right here. Let's look at this candle right here. Let's look at this candle right here, the break candle. They're big candles. And if you're using the 50-50 system, that's saying you're waiting for that to close, right? Well, here, you make the break above, and 7 days later, you're still in the same darn spot. Here, yeah, you waited for it to close and it moved up a little, but really look at this. Half of the move between the low of this candle and the swing high it made was that very first candle, half of that move. Look at this one. You wait for it to close. Okay, I'm buying. Wow, now we're trickling down. Does it really look like an effective system for you to be able to trade within the confines of that trading system's rules? Absolutely not. If I gotta wait for that candle to close and that candle's pretty much the high of every run, then I might as well reverse it, and every time it makes a big breakout candle buy puts, and I probably at least have a chance to make a little bit to the downside, which in turn doesn't make a whole lot of sense for consistent trading. One thing that you should have observed when we were looking at this chart with moving averages on it is, even though you have some bigger moves in there, what do you notice about the size of these runs? From this low, oops, come on, drawing tools. From this low to this high. From this low to this high. From this low to this high. Even from this low to this high. From this low to this high. They're very similar. You see it again up here. You get a little pullback here to this high. You get a low here to this high. You get a low here to this high. Even here, 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 here. Very, very similar in how it's moving, right? I don't even need Fibonacci retracements or something to look at that and say, even when it's kind of moving up, it's kind of moving the same distance. Can't your eyeballs see that too? Now, as traders that actually have a chance to be successful, we should realize that we're not always going to get the low or sell the high. Another reason you want to look at channels on something like this, because effective channel trading is something that gives you, multiple points. And okay, that looks all great here. Looks great here. But you wouldn't have got any type of buy here. And here would have told you puts at the best time to buy calls. Right? Am I right there? It would have said buy puts at the best time to buy calls. That's actually right there all I need to see to know that I don't want to put channels on it. Because quite literally, it said buy puts at the best time to buy calls. Now, Fibonacci retracements, or extensions, work a lot like channels. They're non-linear, like a Fibonacci retracement that pretty much just gives you horizontal values. You see, the Fibonacci retracements, they're going to move with that up and down movement, almost giving it a channel type look. And I might not be exact on these points because I've got it zoomed out so far. But I'm going to be pretty darn close. And let's just kind of zoom this in just a little bit. And let's really look at what my Fibonacci's, and we're just going to kind of start during this period of time. And really get a look at what this can do. Now, I would have to agree that even up to right into here, you're going to have to kind of be looking puts you're making lower highs, lower lows. You know, trading is about identifying highs and lows, and you don't need a tool to be able to do that other than your eyes. If you don't have those, then pretty much anything I have to teach is going to be difficult for you. But there's a couple different ways to kind of give us points that we could kind of plan for. And just like with any type of system, I want to see if the majority of trades I enter could produce wins. So, you know, on a pullback from here, I might have started trading for this 3274 target. And in all honesty, at this point, I wouldn't have any other Fibonacci's in here. And here, what would I have needed to do with a Fibonacci trade? If I was looking at puts and it just went above the 0 line, I'd have to chalk that one up as a loss. But as a trader, I have to know that even the most effective of systems is not going to give nothing but winners. If you find that system, I'll give you a lot of money. One that literally guarantees you will never have a losing trade. I will pay you $1 million a month, if not more. Again, through this period, and now seeing a higher high, I'm not necessarily yet looking for puts. But without a positive move off of where I've marked, you know, it came down to a target area, I'm not looking at puts off of a higher high. I'm looking at the point I might buy calls from, which still hasn't really set up, but bear with me for a little bit. As things start to produce, I already had one loser. I think we're making a positive move. We could look at trading to a 38.88 target. Let's see how it goes. Well, you know what? Hey, that one hit. So we had a loser that would have probably stopped us out with, honestly, I'll be honest, about probably a 30 or 40% loss. Yep. Even though you could have bought right in here on those puts and then this candle stopped you out only to watch it fall again. If you were trading that system, you'd have probably had a 30 to 40% loss. Here, $3 move, almost $4 move, probably close to doubling your money. Now, let's see, after target hit, the one thing I don't want to do, and this is where a lot of people mess up, is they say, oh, well, I sold calls, I have to buy puts, right? Well, see, your target was hit here, and you really got no bearish identification or indication, and then it actually popped up more. Okay, you already sold your puts or your calls, but that doesn't mean buy puts. Now, as that chart starts falling, to say, hey, I wonder where this thing could go. And we start looking, maybe trading this down to 35.82. That's a $2 move. We'll see how it does. Would that have been a winning trade? I don't care if it exceeds the target. If I'm trading systematically, I'm concerned if the target's worth trading to. And to be quite honest, I've got no problem selling it at the target. Okay, so now we've got 2 times with $2 to $3 moves. We're looking good so far with trading this system. As this thing starts to set up an up move, low, high, low. Let's see how it does. And what's funny is right here, if you didn't notice, it actually gave you another trade in which it would have hit that target. Right here, there's another trade to make. And it exceeded it, but it still hit it. These are all individual trades that you can identify on it, all while still staying in that trade to here. Now, in this case, did it hit my target? There would have been another one here. So there would have been 3 that hit, this longer one that didn't. But let's kind of wait here and see. Did it hit my target? And by the way, there would have been another one to the exact same target, actually. So, you know, there'd have been 1, 2, 3, now 4, and the big one 5. All trades to have made right there. So does everybody follow me? I don't even care that it exceeded the target, to be quite honest with you. Trading isn't about what if it goes higher. And there would have been another one that you're almost to. Trading is not about what if it goes higher. And there it hit it. 6 trades in that sequence using your fibs. Now, do you think you'd have been pretty busy? I mean, think about it. After getting in the one trade, you're in 1, 2, 3, 4, 5, 6, 7, 8, 9 days till it hit that target. But during that 9 days, you had 1, 2, 3, 4, and then a 5th one also hit. So now the question comes, from what we've looked at so far, for this one chart, what seems to be an effective way of trading it? The same question I asked earlier. Well, Fibonacci extensions. There's different types of Fibonacci tools. So now that we looked at this chart, 60-minute chart on Twitter, we said, man, these moves are kind of very consistent. It looks like I can mark them to a good degree of accuracy. And I'm not worried about when it exceeds my target. I'm actually more worried about the times it does not hit my target. Does that make sense? If I'm going to use Fibonacci extensions, I could care less about when it exceeds my target, because at my target and beyond is target hit as far as I'm concerned. But if it does not hit my target, then I'm not using an effective targeting system, right? Now, what we saw is through that little sequence, at least, it at least looks like that system could be effective for assisting us in picking high and low points. Anywhere in here so far have I talked about anything like misleading that's you'll never have a loser if you trade Fibonacci extensions on Twitter 60-minute chart? Did I say that? Okay. Now one thing that kind of comes to mind is, how do we pick an expiration and a strike for what we might be trading? I know that comes to mind because I got like 8 private messages that all ask the exact same thing. See, right now, this is the disappointing thing to me, to be honest. Right now, I got a lot of people already thinking, I could trade this, I could trade this, I could trade this. They're asking the wrong questions right now. We're still identifying what system do we even want to study for probably quite a good period of time before we ever put our money into it. Visible up and down moves are how we would know where to mark those quote unquote spots. And let's kind of go back to this same area one more time, because I'm pretty sure at this point, most people are going to be in agreement that after looking at moving averages, after looking at swing points, for this one particular chart, the Fibonacci extension might be our best bet, right? Does everybody agree with me on that, just from what we went through? Okay. So once we can go through and, we had that little puts trade that would have been a loser when it gapped up here, and it even went at our target. But through the period that loser existed, and see, this is what you'll learn when you actually study the chart, as opposed to just randomly picking one up and throwing your money at it. When you get to this time, when you're like, hey, this high right here is higher than this high, right? This high here is higher than this high. So if this is the low before this high, I'm expecting that this next low will be higher than that, right? Could be any price higher. Could have been 1 penny lower than the high before it went around again. But I'm expecting to get some sort of bullish indication. And I'm not talking one green candle. I can tell you right now, if your mind can't step past the one green candle, one red candle mindset, you are going to fail. And as much as I hate to admit it, no matter how many hours I spend trying to work with you, there's nothing I can do about it until you change your mindset. Because I've tried with a lot of people, and the ones that just can't seem to grasp it, they can't. I mean, they just baffled. One green candle, one red candle. What do I do? So at this point here, even if I attempted the one trade here that didn't work out, first off, options are a game of what size moves. Options are a game of what size moves. $1 moves. So yeah, I could say all day long, well, if I put a little Fibonacci here and here, it's going to give me like a 50-cent run, right? And it's pretty effective. It got to my target. I can't make money on that. So first off, I just need to exclude anything that's not giving me a $1 move point. Now, is this one green candle enough to say, yep, to the moon? One green candle. I mean, it had one green candle here, it had one green candle here. No. I want to let it start to set up a bullish indication, not necessarily multiple green candles. I don't need to let it get all the way to the top and say, that was a calls trade. As this thing starts to set up a bullish move, I should not be right now looking for puts. My indication of that was here on a higher high. I don't need to look for puts. I need to look for a bullish indication to buy calls. And as this starts to set up, well, you know what? That right there, you had a wee little up move that wasn't worth trading for. It come back down, and you know what? It just went higher. So simply using that low point, the higher high here, the visible move, now I can say, is that at least $1 move, and is it worth trading for? So how do I pick my strike price? Let's start with the strike price. How do I pick the strike price if I'm using Fibonacci extensions for my trade? I want to pick a strike that would go in the money at my 100% line. Now, before anybody asks me goofy questions like, well, why don't I just buy in the money down here? Or why don't I do something like this? you're going to have higher volatility and out of the money options. But you don't want to buy a $45 call down here because that just wouldn't make sense. Remember, you are never trading something for the first time that you have not studied. If you do, hey, let's just hope we make money because that's what you're doing. You're driving down the interstate with a duffel bag full of money on top of your car that's unzipped, and you're hoping the money's still there when you get to your destination. Hell, you're hoping somebody passing you on the interstate puts money in the bag for you. That's basically where you are if you are trading without studying. So Twitter has 50-cent increments. You can go with a 38.50 on this because you'll have the confidence to do so if your study has shown that you hit your target most of the time. How do we pick what expiration? Quite simply, if we're measuring the move that it made price-wise, we might want to measure also the time it took to do it. 1 day, 2 days, 3 days, 4 days, 5 days. And even though time decay is something that is presented on every option at all times, when does it really start to get bad and noticeable? When do you really start to notice that, man, if I hold that one overnight, if it doesn't gap in my direction, I'm kind of taking a hit from close today to open tomorrow. Well, the last week is when it's really bad, but you'll actually start to notice it the last 2 weeks. This isn't a system like the 50-50 system where I can say, hey, if you're using the 60-minute chart and it breaks that line, always buy the next week's options. Can't do that. You need to look at the number of days you need based on your past move plus 2 weeks. So here, this is on a Wednesday. This here is on a Wednesday. So how far out would you actually need to be? Well, you know, on the Wednesday, you need, and that's at the end of the day, so you need Thursday, Friday, Monday, Tuesday, Wednesday of the next week. Then you only got 2 days until that week's options expire. So we would actually, on the Wednesday, be trading out probably 4 weeks. Now you could say, but yeah, but what if it hits it in 2 days? Well, if you're trading 4 weeks out, you're going to make money on that too. But I could buy it cheaper if I bought this week's expiration. But you might not hit your target. Systematic trading is about developing a set of rules and not saying what if. So you're not taking a 30% loss overnight just on a flat open. That's a pretty good reason for why adding the 2 weeks, because the last 2 weeks, the time decay accelerates excessively. I mean, it's really bad the last week, but the last 2 weeks. So, you know, again, with that type of thing, I can give a recommendation based on my experience. You can follow it or learn the hard way rather than learn the way I learned. It wasn't in a book. It wasn't from somebody telling me. It was like, dang, that last 2 weeks, those things get a little wishy-washy. So if I'm going to trade this type of system, I need the time I need to make the move plus 2 weeks. Something like that was developed with thousands of trades to prove to myself why I need to say that. Now, it is possible that if you actually, during this move, not these little pullbacks, because Fibonacci extensions, if you're not getting a big enough up and down move, they're not going to give you a big enough up target. So you don't even need to waste your time marking these. Now here, you can see you bought Wednesday. You had Thursday, Friday, hit your target. Man, crap. Actually, that's Monday. I'm sorry. Why'd you have me buy out those extra couple weeks? Well, if it would have went flat for a week, you wouldn't have been asking me that question. See, what I find is people want the best of both worlds. They want all the volatility of a weekly option, but none of the time decay. None of the danger of holding that option. Rather than disciplining themselves enough to just follow some basic rules that could help them to effectively make the trades. Now, when I use Fibonacci extensions on something, first off, I want to see how they trade in relation to my studies. I've got stocks that I don't use the 100% line on. I use the 78.6 line on. Why do you think I would use the 78.6 line instead of the 100% line as my target? Because on that particular chart, that's the number that's consistent. I wouldn't do it on every chart, but in my studies, if that's what I find, then that's what I'll do. What I want to see is that I can effectively trade, and the majority of the times, if I catch every one of the trades, I don't want to see that, oh man, I got the absolute lowest buy price, because that's just a guess. I don't care what you say about any system. Trying to get the absolute lowest buy price, that's a guess that you hope you're right on. Trying to guess the absolute high to get your sell, it's an absolute guess. You're guessing, just hoping to be right. Systematic trading, or even like a Fibonacci extension system where it actually gives you that target price, what I want to know is, throughout the process of it, do I hit my target more than I miss it? Doesn't matter if it exceeds it. Does it hit or exceed? That would be a yes, it hit my target. Does it miss? That would be a no, it didn't hit my target. As I go through and just simply go through the chart, that last one exceeded the target, but it's a yes, it hit my target. If I'd have sold exactly at my target, I could have made money, and I wouldn't have had to care what if. Here, it hit my target. Who cares that it exceeded it? It gave me a point to trade to, and here's yet another time it hit the target. Again, don't try to buy the absolute low. You get a little consolidation. Hey, I'm breaking this consolidation. I'll use my last low. Here's what I'm trying to say. If I was using this high, this low, this high, those 3 points, and it said you're going to come down to around here, with Fibonacci extensions, I call them PDC targets. Pretty damn close. Can I come pretty damn close? And if so, I like to use them. Well, if this high point, this low point, and this high point gave me that target, would you say I came pretty damn close to it? Does it look like I came pretty damn close to that target? Hell, once I broke below it, all I did was go sideways, so I was okay to just sell it at the target anyway. Well, if that's the case, I want to use as many of the points that gave me that target in establishing my next target. Well, it's not a 4-point system, it's a 3-point. So I can't go to this high. I'll go to that same low I used. I'll go to the same high I used. And now I'll go to this low. That's how I'll pick the points that I use. I'm going to use them based on the accuracy of the points that gave me that target. Now here, you see, wow, I kind of made an up move and I came back, but I'd still be in this. Man, that's starting to move up. Well, here I can mark a low, a high, a low. And by the time this told me it was making a bullish move, I also said, well, shoot, it could just pull back from here. I wouldn't be trading this one. Now here, all the while, I could have again been in 39.50 calls, but we're not really, tonight's not about talking about walking through every trade. It's about slapping something on a chart saying, hey, this looks like it'll work. Now what's the next step? Now here I could have said, hey, 37.21, I'm kind of at 36.20. Hey, that might be something I can make a trade for. Well, you know what? I wouldn't care if it exceeded a target. Sell at a target. When you sell at a target, you get a winner. Plus, you've got this other one you could be in for right here. There's many, you could have gone all along here, visible up and down moves as you're going through it to determine other ones, just like we did before. Selling at your target. Don't worry about if it exceeds your target. What you see is every time I've slapped Fibonacci's on here, except for one time, it hit my 100% line, right? That first one, when I said back in there, you'd have been looking at puts first. That first one did not hit my target. Every one since has, hasn't it? And then you're going to say, well, this one hasn't yet. Oh, well, okay, there you go. When I can make that identification on that particular chart, when I'm looking right here and I say, what trading system could I most effectively trade this chart with? This chart, not this ticker, this chart, the 60-minute chart. You might actually find, you might look at like a 5-minute chart and say, wow, I cannot find anything that would effectively help me with that. Guess what you should do in that case? If you cannot find something that you could effectively trade it with, just make it up, play it as you go, or put a big freaking sign on your journal for that stock that says, don't trade the 5-minute chart if you can't find something consistent and effective. I've got several charts like that. I'll flip through my stock journal. Yes, I keep notes on all my charts. You should too. If you actually care about your money, you will spend time studying. And I've got charts that literally when I open my notes for it, it'll say, don't look at 5-minute chart. Don't look at 30-minute chart. Don't look at a 10-minute chart. Don't look at a 60-minute chart. And it says that because I can't find something that would be effective and consistent. Basically, I'd be like, well, I'll just make up a swing point trade here and hope it works. And if that doesn't, well, next time I'll try Fibonacci's and see if that works. So once I find something that I say, hey, this looks like it works, what should I do now? A minute ago, we talked about how to pick a strike or whatever like that. In all reality, that was an irrelevant point in this conversation to have even discussed that. Because what should I do now that I say, hey, I think I could trade this chart using Fibonacci extensions? What do I do? See, everybody's always thinking about making the quick buck. How can I make money right now? Ooh, I got to spend some money. I'm in a hurry to lose. What do I do right now? I mean, you could paper trade, but my thing with the paper trading is while I do think it's an effective thing, Sometimes it has you in that mindset of, hey, you're trying to pretend it's real money, so you actually don't study. It's the same reason I ask people to sit out their first week or so here, because as soon as they enter that first trade, their ears close. Their ability to learn stops. So what should I do right now after looking at the 60-minute chart of Twitter to say, man, it looks like Fibonacci extensions could be pretty effective on this? If your mind is right now saying, plan my next trade, you're wrong. And you will be proven wrong when you start trading it and saying, well, why didn't that work? We already went through a back test. We already looked at the chart and ran some times that those Fibonacci's were on there, and hey, it looked pretty good. But it's easy to see the past. Hindsight traders make up 90% of the trading world. Oh, did you see this great big one run? Or if I had bought this, it could have done this. Or, I've never lost money in a hindsight trade. You want to be able to watch this for a while in real time, marking your fibs. And at first, while you're doing other things, hey, did it hit the target I thought it would hit? Okay, it just hit that. Let me go back through a few different expirations and strike prices to see which traded the best. Now, the next time I get a fib extension with a target point, let me look really at those particular strikes, not necessarily those same strike prices, but how far were they out of the money when I got the buy signal? How many weeks out from the expiration or from the current day were they for expiration? Let me look at those again. Okay, wow, those three strikes were consistent. Okay, well, this one made the most. Let me see the next time. I'll kind of, that one was 3 weeks out and $1 before. It was $1 in the money at my target. It wasn't just the first out, it wasn't the first in the money strike at the target. It was $1, and that one worked pretty good. And that's the one that made me the most money in my study. So let me try the next one and just focus on that particular option. And then it sets up, it gives you a target, and you say, okay, I got these notes that said, look, 3 weeks out, and instead of going first strike that would be in the money at my target, I want to be $1 in the money at my target. And oh, wow, that's starting to work. And right when you say, dang, I need to be trading this, what should you do? Right when you say, dang, I need to be trading this because everything that I just did to study it seems pretty accurate. Right when you say, I need to be trading this, what do you do? Thank you, Taylor. Thank you, Taylor. That was only 3 trade scenarios that I went through with you. And all that did was help you narrow it into a strike price. And you really only watched that one time. Let's think about things this way. I want to start a stock trading chat room. So I build a website and I say, I've got 3 trades in my personal trade history over my career. Come follow me and pay this much money. Who's signing up? No, I'm pretty sure that nobody is. Nobody with half a brain. But then again, penny stock people, they struggle with that brain thing. Oh, it doesn't matter. I've made 3 trades in my life. I'm a winner. Are you going to follow that? Come on. Head for the hills. Now, how many trades would you have to see occur to think that you could actually build percentages? You know, like, hey, if I trade this 80% of the time, it produces winners. How many trades do you actually need to see happen? Now I say it, that's just a OCD habit of mine to say 1,000. I don't think that's the right answer to give. But you know what? People think if they hear a number like 100, they think, dang, I'm going to be studying this a long time before I ever make my first trade. And I'm going to say, dang, do you realize how good you're going to be when you start trading? Do you realize how much confidence you're going to have in your trade system? Do you realize that you're going to fully expect at the time you make your first trade exactly what your performance will be trading that system? Do you realize that you will know going into that very first trade the common occurrences on that stock? Do you know that going into that very first trade, you will actually not question, not one bit, exactly how you will trade it? And do you know that going into that first trade, should it be a loser, you will understand through your own testing that some of them are going to be? Where if I'm only 3 little trade tests into this and I say, sweet, if I'd have traded those ones, I'd have made money, and I go in and it's a loser, what's the first thing that happens? It happens all the time. Somebody's like, okay, you showed me all this stuff. I'm going to rush in and do it. That trade was a loser. Ditching that trade system. And that's what they do. Now, if I'm going to study this particular chart with Fibonacci extensions, what else do I need on my chart? What else do I need to put on this chart? Oh, and by the way, for a couple of the private messages I got, no stock moves straight up and down. As you can see, the period of time that this made ups and downs, you might study it for a month to see 50 to 100 occurrences, but I will guarantee you that once you've compiled data that you can trust 100% and not doubt whatsoever, it's going to keep giving trades because it's not just going to go straight up and straight down. You are going to be able to continue to trade it. I'll guarantee that. Why? Because the stocks we talk about here aren't one-trick ponies, the pump and dumps penny stocks of the world that make one up run, one down run, and go sideways forever. We don't talk about crap stocks. Now, in looking at this chart in particular, I've pretty much determined myself that, hey, 60-minute chart, Fibonacci extensions work pretty good. And I'll tell you, and I mean this like nothing I've ever said before, or more than anything I've ever said before, that if you take the time to study it in the way we just talked about, that A, once you determine what system could most effectively trade that chart, and then B, translate that into real-time study and studying different strikes, different expirations, you will not have to question, well, if I use that on a 60-minute chart, how far out do I buy and what strike? Because you'll know. You will know when you make that first trade exactly how to make that first trade, what to buy, when to buy, and most importantly, when to do what. When to exit. Now, some people, and I know this is going through people's heads right now, I want to trade right now. I want to do it right now. I am in a hurry to spend money. And I will say that, when you're first starting out, if you're in a hurry to spend some money, that's why I share my trades with members. They can follow those, and, I give you a little bit of a trade plan and say, these are the types of alerts you'd want to follow. I point you in that direction, and so long as you follow that, more times than not, you're going to be okay. And you could follow those things while you're doing your study. But I'll tell you this much, and I mean this 100% without a doubt in my mind. If I'm following some guy because I just can't tolerate not throwing my money at something, and I'm studying something, and I find that maybe 82 times out of 100 that trading with a very specific discipline that I have in my notes for that chart, that I'm going to double my money per se. There's going to come a time where I'm going to make this my priority, and following that guy becomes more of, well, I'm doing this and this is working just fine, but hey, I'll follow this guy on some stuff. But there's also going to come a time where you say, man, I got so much of my stuff that I'm doing with my money based on my studies that I don't have anything left to follow this guy with. And you know what I'm going to tell you then? You're finally at the point where you're going to be successful. And probably not a minute before that time. Probably not 1 second before that time. Will you be ready to hear that comment? So, we kind of looked at the 60-minute chart for this particular stock. The symbol of that stock really doesn't matter. Let's go to looking at a 15-minute chart. Now remember, this 15-minute chart's going to give you some information that all of a sudden changes. We already know on the 60-minute chart that it looks like Fibonacci extensions might be the most effective. Do you think that about this 15-minute chart? Let's think about it. What key thing did we identify when we looked at that 60-minute chart that made us gravitate towards Fibonacci extensions? The moves were all of similar size, right? Yeah, there was a couple big moves that were mainly just gaps. So if you were already in that side, well, hey, it just gapped way past my target, right? That's what we saw. Let's look at this. Are the moves consistently similar in size? Right here looks a little similar. That doesn't look similar. Here looks similar, and then here's one way out of the way with a whole bunch of sideways in a very, well, I guess it's kind of similar to that down move. And then boom, out of nowhere after a lower low, boom, it goes up. Not really similarity here and into this drop. Maybe that drop was replicated once right here. Hey, Taylor, I was just thinking the same thing. That maybe I should, by looking at this, look at swing points. You see, because, right here, it broke below my swing low. But if I'm using swing points, am I buying it just because it broke below the swing low? I could. Usually I like to see if it retests it. But we could also kind of throw in 50-50 trading system here. Let's just say this is the point I'm starting at. Close below the line, so I bought puts. Next candle, crap, I wish I didn't buy those puts. Wouldn't I have had a green line right here? You know, you get a little pullback here, you'd put a red line. So right here, I buy calls. Okay, well, wouldn't I have had a green line right over here too? And also a green line right here? I can't zoom it back anymore to make these not appear right now, but it's important things to discuss. So like with the 50-50 system, I might have bought puts right there, but I'm buying calls here. I'm buying calls here. Then it closes back below this swing point, so I got to delete it. And I'm going to put a new one right here. I'm buying calls again here. It does close back below the swing point, so I got to delete it. But I got to put a new green line here. Had a decent little pullback, so I'll put a red line. I'm buying calls here, actually for both of those lines. I bought one puts buy. That was a loss. I made 1, 2, 3, 4 calls buys, right? Actually 5. And then I get a green line here. Okay, well now it falls down, it starts consolidating. I'm gonna kind of mark this as bounce and bounce, bounce. Well, you know, right here, I actually would have bought puts. Yep, right there would have bought puts. And then it does what? It comes right back and closes above that swing point. With the 50-50 system, would that have been a loser? No, not that one green candle. And then, hey, it falls again. Okay, I'm kind of setting up again. I get the chance to buy puts. Well, this swing high goes away. This swing high goes away. I come right here. I break below another swing low. I get a buy put. Huh. Okay. It does come back and close above it. Gives me another point here. So now all of a sudden, are you starting to see some consistency? It started with a loss on puts. Do you care about that loss after getting those 5 calls buys and then after your 5th buy seeing 4, 5 big old gigantic green candles? Is that going to bother you? After you got your 5th buy, you moved a full dollar. If you're using the 50-50 system and trading one strike out of the money, is it pretty safe to assume that you're going to hit your 50% limit on a $48 stock that moves this a whole dollar? Answer that question. Is it safe to assume? No, it's not safe to assume. It is not safe to assume that. But how would you know it to be true or know it to be false? How would you know it to be true or know it to be false? Think back to just a moment ago. We talked about, we were going through the 60-minute chart. We looked at Fibonacci extensions that look good, and then I told you, now what do? You watch and you tweak your system for that chart, right? You might find out that even though I said you can pretty much go whatever strike will be in the money at your target, you might have found out that a different strike works better. A different expiration works better. You won't know that from just trading it. You will know that from testing it. So now at this point, I'm like, wow, you know, even when this does give me, okay, you know, like right here, would have been a puts buy, right? And then it turns right around. Guess what? It gave me calls buys. It gave me more opportunities to the other side. Right away, I can see that, you know what? I might want to look at the 50-50 trading system for Twitter on what chart? We threw swing points up on the 60-minute chart. Did we like them? Did we like the swing points on the 60-minute chart of Twitter? No. But they look pretty darn good on the 15, don't they? So I take my little stock journal for the page that says Twitter, and little notes I'd have is, you know, 60-minute chart, Fibonacci extensions, 15-minute chart, 50-50 system. Is it time to just go trade away? let's put it this way. Those of you guys that follow my 50/50 alerts for Caterpillar, have you ever noticed that Monday and Tuesday, I alert first out of the money strike, but Wednesday, Thursday, Friday, I'm always at the in the money strike? You guys ever notice that? That Monday and Tuesday, I alert first out of the money, just like the rest of the 50/50s. But Wednesday, Thursday, and Friday, I alert the in the money strike. Does anybody know why I do this? You see, I can tell people usually don't, because as soon as I alert it, they're like, I get a private message. Wouldn't you do this strike if you're doing one strike out of the money? But why do you think I do it? Because based on my study of that chart with that trade system, not just a generic trade system that's just going to be the cure-all that ends all for all charts, I found that if I want to stay with the same week's expirations for the higher volatility, that come Wednesday, I need to trade the in the money strike. I found it from my testing on it. So my notes on Caterpillar in my stock journal say Caterpillar 50/50s, 15-minute chart. Monday, Tuesday, first out of the money strike. Wednesday, Thursday, Friday, in the money only. That's what it says right in my stock journal. If you don't have time to keep a journal on your stocks, you don't have time to trade. And I can't be more serious about that. But, you know, the other thing with it, you know, the question that you asked, Robert, what about BABA? What have your studies shown about BABA? And what I'm trying to do is, with that question, getting you to realize that by the time you're ready to actually trade a chart, you shouldn't have questions about it. I don't like to make the 50/50 trades on BABA's 60-minute chart, but if I identify consolidation on BABA's 60-minute chart, I don't trade the 15. Why? I found that to be most effective from my studies. That's what I found. That if I identify consolidation on the 60, I don't care what the 15 does. And there is a difference in every single stock you trade. Just like there's a difference in every name in this chat room and the personalities that are attached to them. But those are things that you don't know if your only goal is, I got to trade right now, right now, right now. I have a pulse, therefore I have to trade. People think, well, I'm paying money to be here. I need to trade right now. When the reality is, the value's in the education. And if you actually take what's really valuable here, you're going to make good money. You might not make good money this week or your very first week here. You might even be like Ken H. I think he's in chat. He was earlier. Yep, he's still here. Ken H, he got here, signed up. He was rear and ready to go. I said, Ken, listen to me. I want you to take a week and not trade. What? Come on, man. I just paid you. I want trades right now. Ken, just trust me. Take a week. Don't trade. 3 weeks later, on his own, actually, I think it was a month later, he said, Coach, I think I'm finally ready. Wow. That guy that was rearing and ready to go day one. I asked him to wait a week, and you know what he found in learning for that week? That he needed more than a week. And he's still here. Why? Because that week taught him that if he spent more time studying, he would be more prepared to attack the markets. And if all you're thinking about is, well, just give me something I can trade tomorrow. Tomorrow might be a good day, but tomorrow might be your last day too. You can't force any particular trading system onto a chart. How do you know what type of trading system can be most effective for that chart? How might you know? By taking the time. I mean, let's face it. For the start of this big time, confusing as heck scientific process, did it take us a lot of time to just kind of sit and stare at it for a second and then say, that 60-minute chart, it was kind of obvious at first that those moves were very consistent. Okay. Then we switched to the 15. We couldn't just automatically say, I trade the 60 with fibs, I got to trade the 15 with fibs, right? We couldn't do that. We had to say, I got to pretend this is a completely different chart, a completely different ticker. Because if I'm going to trade that 15-minute chart, I want to know what will most effectively trade that 15-minute chart. There is a lot of inconsistency in the size of the moves on the 15. Is there going to be random times that Fibonacci's would work? Yeah. Yep. Random times when Fibonacci's would work. Do you want to put your money in a random time that something might work? Is that what you want to do? So then we looked at it a little more and it's like, hold on. Yeah, you do get some consolidation time on it. You might even get some lower lows that turn into higher highs. Man, my swing points would tell me that. So we started to look at that and Taylor said, hey, coach, I think swing points would look good. Put it on there. I was like, wow, it kind of looks pretty good. It didn't give me the single buy signal like I like, where if it breaks a swing point, it comes back and retests it regularly. But what it did do is say, I got another swing point based trading system that I use, and I really like it because if I can find an effective stock with it, on those good moves, I'm not going to just be right one time, am I? If I'm wrong, I'll be wrong one time. But when I'm right, I got to be right more than one time. And now I got to the point where I could look at the 15-minute chart and say, this looks like it could be a good 50-50 chart. And even at this point, when I determine that, what must I do? I still need to watch it a little bit in real time. I still need to actually not have a generic rule set for a chart or for a trading system that I just slap on a chart. I need to say, okay, I know Coach Mike says that 50-50 system, if I go first strike out of the money, blah, 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 blah. But what if on Twitter you find out that it doesn't matter on the 50-50 system if you go first strike out of the money or $3 out of the money, you win the exact same number of trades? What if you find that out? What if you find out that you have the exact same percentage result trading first strike out of the money or 4 strikes out of the money? That is a big deal, Leonard. If I win 87% of my trades trading first strike out of the money, but when I go to 3 strikes out of the money, now I'm still at 87% of my trades. Then all of a sudden I can put in my notes, hey, trade 3 strikes out of the money. Now, what if I find out that, I win 87% of my trades trading first strike out of the money, but if I go to 3 strikes out of the money, I only win 80%, but instead of the 50% limit sell, I can set it at 100% and still win 80% of the trades. Is that still worth maybe altering the system for that one stock? Yeah, I would say. But see, how are you going to find out those things? How are you going to find it out? And you, Chris, I saw your question. That's one we'll get to in a minute. You're only going to find it out by taking the time to study it. So what key points do you think you should be taking from tonight's lesson? If you had to break tonight's lesson into specific key points, what would you think the major things were? Hint, hint, they were the ones I raised my voice when talking about. Let me break them down for you, just so you don't have to guess and then confuse yourself. Your first look at a chart should be with nothing on it. And then start to build based on just what you see. Keep it simple, okay? Just like when we had the 60-minute chart up, we gave it an honest go around. I think one person said, oh, I think your moving averages would work. We put them up there. You know what? They weren't going to get us most of the trades. But we did see during that time that it was very consistent in the size of moves it made. Right there is your first trigger to say, let me put like Fibonacci extensions on there. Because if it's going to be consistent in the size of its up and down moves, Fibonacci's is going to help me catch that. Don't just run into a chart and say, I'm going to trade this one with swing points. Ha ha! Because if you did that with Twitter's 60-minute chart, what would you find? That every qualified buy you had was a breakout that didn't keep going, right? Almost every one we looked at, it gapped over a line and pulled back from there. That's not effective for you. Once you do determine that, don't start clouding your mind with, well, what strike do I buy? What expiration do I buy? Tell me. I'm ready to trade now. Don't do that. Start watching it in real time. Mark your Fibonacci extensions and start keeping a little record of, yep, I hit my target. Those first few times, go back through different expirations and different strike prices. Start to whittle it down or dwindle it down to, this is where you get to be greedy, by the way, for those of you that are impatient and greedy. Start whittling that down to what? The ones that make the most money, right? If you find something and you're like, wow, I hit my target 9 out of every 10 trades, do you care about the one that doesn't hit your target? Or do you care more about making sure you're consistent with the system you're using to pick your targets? What do you care more about? I'd want to be consistent. And if I find out that with the way I choose my target points, however that might be, that, 8 or 9 times out of 10, I'm hitting it. What do I need to think about like position sizing for that? Let's say I hit my target 8 out of 10 times and I find out that those options on that particular chart on those 8 out of 10 times average me 72.5% profit. Do I say, hey, that sounds pretty good, I'm going to put my whole account in the very first trade? Well, if I find out that, I base something off of 10 trades, I need to be able to make those 10 trades, right? So that'll tell me my position size, won't it? And if I say, hey, I'm only going to trade Twitter's 60-minute chart using Fibonacci extensions, because in my testing, I went through 100 different trades and 8 out of every 10 times I hit the target. Is there a possibility that 2 of those 10 might be back-to-back, that you miss, that you fail, that you lose? Do you think that's a possibility? I do. I do think it's a possibility that they could be back-to-back. So you want to make sure you have enough money to trade it consistently. And now once you've studied the different strike prices, the different expirations, the consistency with the trades you have studied in real time, in reality, there's no real number that I can say that, once you've tested this through 537 trades, you're ready. You're going to know you're ready the same way I told you, like with that example with Ken. He came to the chat room rear and ready to go. I said, Ken, please just wait a week. I know you want to go right now, but trust me. And then a month later, he says, I'm ready. And I'm thinking, wow, I thought you've been trading for like 3 weeks now. He said, no, you making me wait a week made me realize I wasn't ready. How do you know that you're going to be ready to make that trade? Or when you're ready to start trading it? Sadly, that's the right answer, Catherine. You know when you know. And you're going to know at a different time than I'm going to know. But let me give you a little hint on when that will probably be. When you can look at the chart and say, you know what? If Twitter closes a 60-minute candle, or not even close it, if we're doing like fib extensions, if Twitter breaks 4704, I'm going to take the April 2nd 4950 calls. For whatever you're, that just, I'm not saying that's the particular trade, but when you can look at it with your notes in front of you for that chart and say, when it does this, I'm going to be ready to buy this. And then you go to your brokerage account and you've already got that typed in, ready to go. And when it actually does that, you're able to hit the button and not go, well, let me see, should I do that strike or a different strike? Maybe I should come in like 1 week sooner How many of you guys do that when you go to enter trades now? Am I picking the right strike? Am I picking the right expiration? You know, you don't have to be honest with me, but be honest with yourself. If you do that right now, you're not ready. And that doesn't mean you'll never be ready. It just means that right now your best bet is to save your money so that you have more money when you are ready. Because if you're not ready and you start doing it, chances are by the time you're ready, it doesn't matter because there's nothing left to be ready with. You will know when you are fully prepared and have zero doubt whatsoever about entering that trade. You will know when you're ready when you can see a green candle or a red candle, but know that you shouldn't do anything on it. And what's the only way that you're going to know that? The only way that you're going to have that confidence in your trade system to say, if I buy every time it does this, I don't care when I lose. And that's a hard thing for people to stomach. I can sit here at 9 o'clock at night and we can say it and everybody bobble their head up and down, acting like they understand what I'm saying. But when you truly know that no matter what else happens, green candle, red candle, doesn't matter what the 5-minute chart's doing, the daily chart, the 1-minute chart, if I'm studying that 60-minute chart and I say, based on what I've studied, if it does this, I need to buy this. And then when it's time to buy it, I have zero doubt of what to buy for the strike, the expiration, and my target, and zero doubt that if it's a losing trade, I will turn right around and use that system to buy it again. It is not until that time that you're ready to be a trader. A lot of people have this weird idea that, hey, I want to be a trader because I want quick money. Man, if it were just that easy. If it were just that easy. Identify with an unbiased approach a trading system for a particular chart. Understand that it might be different for each time frame of that chart. Trade each time frame independently. Keep a stock journal or some sort of notes about your stock. The people here at the office, day one, I gave them one of those stenographer's notebooks. They're always writing in them, constantly. If not, they would be in trouble. Know everything about your stock so that when it does come time for you to buy, you have zero doubt whatsoever of what to buy and when to buy it. And only once you've gotten to that comfort and mentality do you actually